On Tuesday, the stock market experienced a sell-off, reversing earlier gains after the release of the January Consumer Price Index report, which showed that inflation grew at a 6.4% annual rate. This was slightly higher than expected and caused concern among investors, who feared that high inflation could lead to tighter monetary policy and lower stock prices. The Dow Jones Industrial Average slipped 241 points, or 0.71%, while the S&P 500 shed 0.49%, and the Nasdaq Composite fell 0.27%. Treasury yields ticked higher, with the yield on the 6-month U.S. Treasury on track to close above 5% for the first time since July 2007. The CPI report revealed that the index rose 0.5% for the month, translating to an annual gain of 6.4%. This was slightly higher than economists' estimates of the basket of goods and services rising 0.4% on the month and 6.2% on the year, according to a survey by Dow Jones. In addition, the December report was revised to show a slight gain instead of a decline. Before the number was released, JP Morgan's trading desk predicted that an annual increase of 6.4% to 6.5% would trigger an S&P 500 loss of about 1.5% on Tuesday. This prediction was better than the worst fears of a greater than 6.5% annual increase, an acceleration in inflation that would have triggered an S&P 500 decline of 2.5%, according to JP Morgan. Despite the report being largely better than feared, concerns remain that the high inflation may not be transitory and could result in the Federal Reserve continuing to tighten monetary policy, including raising interest rates. Experts note that while inflation has peaked, it may take some time for it to moderate to normal levels, and the labor market's tightness may hinder the Fed's efforts to reach its target levels. Therefore, it is unclear when the Fed will shift away from rate hikes and whether the labor market will lose its resiliency. Investors will also be closely watching upcoming earnings reports from companies such as Kraft Heinz, Boston Beer, and DoorDash, as these reports will provide insights into the health of the consumer. The market will be looking to these earnings reports to gauge whether consumers are spending despite high inflation, or if they are cutting back on spending due to higher prices.